Okay, let's have a little chat about your money. More specifically, why that big, respectable bank you've been with forever is, well, completely ghosting your savings account.
So, I did a very brave thing the other day. I looked at my savings account statement, and you know what my big fancy bank paid me in interest? Enough to buy about a quarter of a gumball. Not a whole gumball, a quarter of one. I'm pretty sure you know exactly what I'm talking about. It feels less like a reward for saving and more like a joke, right? And here's the punchline. This number right here is the reason for the sad, gumballless state of our savings. That's the annual percentage yield, or APY, that a lot of the giant banks are offering. 0.01%. You almost have to squint to see it. Now let's put that tiny number into perspective, shall we? That 0.01% isn't just low, it's kind of wild. The national average is nearly 40 times better. But then look at the bottom row. A top high-yield savings account, or HYSA, can pay you up to 5%. That's not a typo. We are talking about earning literally hundreds of times more interest just by having your money sit in a different spot. So what gives? Why is there this huge gap? It honestly feels like your bank is treating your hard-earned cash like a bad ex they're trying to avoid at a party. Well, it turns out the reason is actually pretty simple. You see, the big banks, they're massive. They have millions and millions of customers and trillions of dollars just sitting in their accounts. They're the default choice for most people. So because they already have our money, they don't really need to fight for it. They have zero incentive to offer you a good rate. It's kind of like the only hot dog stand in the desert. They don't have to make a great hot dog, because where else are you going to go? Okay, and here's where the story takes a turn, and we meet the villain. This number is inflation. Let's say it's hanging around 3%. That means every single year, the cost of pretty much everything goes up by that much. It's like a tiny, invisible Pac-Man just chomping away at the value of your savings. And here is what that Pac-Man does in the real world. Let's say you stash $10,000 in your big bank savings account. After 5 years, that inflation Pac-Man has won. Your money is now worth over $1,300 less in buying power. You are actively losing money. But look at that other bar. In a high-yield savings account, not only do you beat inflation, you actually come out ahead by over $700. Same amount of money, same amount of time, a totally different and way better ending. The hero in that story is APY. It stands for annual percentage yield, and it's got a superpower called compound interest. That's the magic where you earn interest on your interest. It's basically your money making little money babies who then grow up to make their own money babies. It's the circle of life for your cash. Let's make it even simpler. After 1 year, your 10 grand in a big bank earns you $1. Maybe you can buy 2 of those gumball quarters now. Woohoo! But that same $10,000 in a high-yield savings account, it could earn you over $420. That's not a gumball, that's a nice weekend trip. We're talking about real money here. Now, I know what you might be thinking. This sounds like a huge hassle. I promise you, it's not. Opening one of these accounts is ridiculously easy. Seriously. You just hop online, compare a few accounts, look for a high APY and no sneaky fees. Then you fill out a super quick application that honestly takes less time than ordering a pizza. Then you just link your old bank account, move the money over, and bam, you're done. But wait, there's more. High-yield savings accounts aren't the only option. Let me introduce you to their slightly fancier but equally awesome cousin, the money market fund. So a money market fund sounds complicated, but it's not. It's a type of mutual fund that only invests in really, really safe short-term things, like U.S. government debt. Think of it as another high-security parking garage for your cash that often pays just as well, if not better, than a HYSA. You'll usually find these at brokerage firms. Okay, let's address the elephant in the room. This is the big fear, right? The main reason we all stay parked in those sad 0.01% accounts. If my money isn't in that giant marble building downtown, is it safe? It's a totally fair question. So let's get right into it. The answer is yes, it is safe. Your money gets to wear a very powerful life jacket. For high-yield savings accounts at a bank, you've got FDIC insurance. It's backed by the U.S. government and protects you up to $250,000. For money market funds at a brokerage, you've got SIPC protection, which covers you for up to $500,000. The bottom line here is your money is secure. And that really brings us to this quote, which hits the nail on the head. The real risk isn't trying something new. The guaranteed risk is doing nothing. It's leaving your money in a place where it's a sure thing that it will lose value year after year. So, Let's just recap the whole thing. 1. Your big bank is giving you pocket lint. 2. Inflation is eating your lunch money. 3. High-yield savings accounts pay way, way more. 4. Money market funds are another great choice. And 5, and this is the most important one, both of these options are safe and insured.
So it all just boils down to a simple question, really. You can let your money take a long, unproductive nap, or you can put it to work, so it's earning for you while you sleep. Which one sounds better to you?